Viewers, welcome back. Can you explain me or our viewers more about this home buyers plan? Because first-time buyers, they are always want to look to use their RSP to buy the house. And can you explain that for our viewers?
Yeah, sure. So first of all, I've had a lot of clients that I've helped buy their first house, and now many decide that they don't want to actually take their retirement savings and use that, so they'll find something else other than the RSP to use for the home buyers plan. But many times when people see that house that's the right house, that's really the only choice they have. They don't have other savings. They've got to get the down payment. Now, fortunately, over the years, the home buyers limit has increased. It's now up to $35,000 per person. So say you, Shafiq, and your wife, you're buying your first house ever. You have you could have more than 35,000, but you'll both have enough that you could take up to 35,000 out of your RSP and put that towards the first home. There is a form that you use to do it. You don't just withdraw the money, and you have to be qualified for the program, which means it's either your first home, or if you haven't lived in a home that you've owned for the last 4 years, then you qualify. And in case you own a home that's outside the country, that would still count.
So we will talk about the qualified for the home buyers plan. But here you mentioned about that a spouse. So I guess you mentioned what you are trying to say is a spousal RSP. That if I have the spousal RSP, can I use my portion and spouse portion as well? Is that $35,000 each, or altogether $35,000?
Okay, so say, no, it's a $35,000 each. So let's say, just to make it simple for the audience, you have, let's just call them Mr. A and Mrs. B. And whichever one's making the most money, let's just say it's Mr. A. So he's got his own RSP for $35,000. He's contributed to his wife's for $35,000, and now they both want to take it out to basically buy the home. So they can take both his and hers for total,
which is $70,000.
Yes.
Okay, so that means that individually they can use $35,000 each, total $70,000 maximum they can withdraw from their RSP in order to buy a house.
Yeah, that's correct.
So if they have that spousal RSP, can they use that spousal RSP to contribute in to go into a home buyers plan?
Yeah, so the spousal one can be contributed. And just so people understand the spousal RSP a little more, it's the person who makes the most money always wants the deduction. So the example I used just before is, let's say Mr. A is making the money, Mrs. B either has a smaller income, or maybe she's staying home to raise a family at the moment, so she's not making money. So he wants all the deductions. So the Mrs. B, it would be her name, but with him as a contributor. Some people sometimes get it.
So whoever making more, most money, or most income,
The person that gets the most money gets the deduction, but the annuitant spouse is actually the one, it's in their name, that is the one with the lesser money. They're the one whose name it's in. And when you repay, you're probably going to ask me about repayment.
Yeah, right.
With repayment, when you do repay, they both have to put, like, he has to put money back in his own name, a regular RSP. She has to put her money back in a regular RSP.
So we will come back to that repayment of the RSP contribution. Sure. But before that, I would ask you that where I stop there, this requirement. So Tyler, tell me, what are the conditions to be qualified for the home buyers plan?
Okay, so if you've never owned a house before, say I've never owned a house before, I can take up to $35,000 out of my RSP as a first-time home buyer. Also, if I haven't owned a house that I've lived in for the last 4 years, calendar years, I could also do it. So let's just say 2016, I owned a house but sold it, and then I didn't live in a house that I owned for 2017, 18, 19, 20. This is 2021, so that's now 5 years. I could now re-qualify for the home buyers plan.
So interesting here. So if I purchase the house first time, okay, lived there for a couple of years, and then I sold the house. And if I didn't buy a house for the next 5 years, living with my parents or with a rental property, then again I can be qualified as a home buyer's plan.
The home buyer's plan is really a wonderful plan because it allows people who are looking to save for their retirement have the opportunity to potentially take that money out and buy their first home. And the way it works is up to $35,000 for a qualified first-time home buyer. You can take out of your RSP with a special form. You don't pay taxes on it, and then you can use that for your first home purchase.
Now I borrow that money, $35,000, from my RSP. Now, how long it takes, or it will take me to pay it back, or government required me to pay back that borrowed fund?
Okay, so the best way to use it is with an example. So what they'll do, say you were to use $35,000 this year to take out and buy your first home. Then because it's 2021, you don't have to pay anything back this year. You don't have to pay in 2022 either. You have to start paying in 2023. So the way they would do that is they take $35,000 divided by 15, so 2333 is the amount, and you'd have to pay that amount back per year for 15 years until you've got it all paid down.
So that means that whatever the borrowed fund, they will divide it with 15 years, which is the borrowed fund has to be paid off in 15 years.
Yes, that's right. It has to be paid off in 15 years.
Okay. So if I sell the house in between, what would I do?
Well, you still have to pay it back because the loan, some people get confused about the loan. It's not like a bank loan. It's like you're borrowing for tax purposes because you're not paying any tax when you take it out. You have to put it back in the 15-year period. You don't get a second deduction, and you can accelerate it. So for some reason, if you had the $35,000 after year 3 or whatever you still owed on it, you could pay it all off. If for some reason you miss a year, like you just forget or you don't have the money, just that amount. In the case we use 2,333, or if we use a simple example, say you took out 30,000 because 30,000 divided by 15 is 2,000, it's easier number. So you would just have 2,000 added to your taxable income that year. It's not really that.
Okay, so that means that if I sell my house and if I have some profit I got from selling the house, I can use that money to pay off at any time.
Yeah, at any time.
Anytime. So there's no penalty. However, what is going to happen? Let's say I borrowed, husband and wife together, they borrowed $70,000. And now 15 years is passed. And after 15 years, still $10,000 outstanding. They missed payment in 1 year or 2 years or 3 years. Okay. And then at the end, there's a $10,000 still outstanding. Would there be any penalty?
Just to clarify, if you miss, say for example, it's year 1, you pay your $2,000, year 2, you pay your $2,000, year 3, you miss. You've got to pay tax on that $2,000 you missed that year. It doesn't accumulate. So you don't have to repay that.
So that means that is going back to my income?
It is going back to that not the whole thing, but that 115 that you didn't repay.
Yeah, there's a portion, Oh, okay. So that means that is going back to my income and I'm paying taxes on it.
Yes.
Okay, all right, I got it. So there's no way to miss the payment. So after 15 years, it will be paid off in any way.
It would be paid off one way or another, whether you're taxed on it or whether you pay it back. Yeah.
Okay. So we are talking about the spousal RSP, right? So can you explain what is the spousal RSP?
Sure. Okay, a spousal RSP is a way of income splitting between spouses. So what you're always going to want is you're going to want the person who makes the most money, who has the most to save in taxes, to make the contribution. A spousal RSP is a way to give the spouse who has less income in that year the money, but get the tax break for the higher income spouse. So let's say we have higher income spouse, lower income spouse. this person gets the tax break. It's this person here with the lower income. To use the example I was using before, Mr. A is making the more money, Mrs. B is the lower income spouse. He gets the tax break, she has it, so she actually owns the spousal RSP.
So, if I understand that if Mr. A has $100,000 income and Mrs. B has $50,000 income, and if Mr. A is taxed, let's say, I don't know, I'm not a tax guy, but 35% tax, then he will, I mean, she will enjoy the 35% bracket
Well,
by
actually,
contributing in RSP.
he will get the break, but she will get the money. So the only, I've rarely ever seen this, but as long as the couple sees it as our money, if you've got like your money and my money, he gets the break. But for the family, they're getting a break. In the example you used, if she got the tax break, it would be about 30%. At his rate, it would be 43%. So why wouldn't they get the extra 13% from contributing
in spousal RSP?
Yeah, doing the spousal. And the fact that it's spousal means, like, if he does all the contributions in his name through all the years, he'll have all the money. But if half is in his name and half is done in her name, with him as the contributor, but with her owning it in her name, then at retirement time, they'll both have the same amount of money.
So, okay, so now the spousal RSP, we understand that both spouse, lower income, higher income spousal will be the principal applicant, if I understand in layman perspective. And spouse, low income spouse will go with that. So together is a spousal RSP, getting the highest tax deferral benefit.
Yeah, you're getting the highest. Well, the higher income spouse could contribute to their own RSP. They'll get the exact same.
He can, on the top of spousal RSP, they can contribute individually.
Well, yes, because there's an individual and a spousal. Now, we talked about the RSP limit before.
Yeah.
So if you're the higher income spouse, say you're Mr. A for the example we used before, and your limit is $18,000 this year, and your wife's limit is say $9,000. Well, you still can only put in $18,000 between your own and the spousal. If she wants to put in her $9,000, she'll have to do it in her own name, non-spousal. So important that everyone realizes that.
So Tyler, thank you so much. Thank you for your time. It was very informative, and I have to admit that your experience and knowledge that will help our viewers a lot. Me personally, I had few questions and confusion about retirement and RSP. After talking to you, I got things pretty much clear. So would you like to say something for our viewers?
Well, what I suggest that individuals do is reevaluate their financial plan. If you don't have a financial plan, the first step is to create one for yourself. If you have one, please go back, look at it, look for areas that you could potentially improve. Find someone you trust that can help you, whether it be a professional, a friend, a family member, someone that can critically analyze it and make suggestions to help you take the next step, because financial planning is really important. We all get busy day to day, and it's really important that you look at what you need to do to take your financial plan to the next level.
Viewers, if you have any question about your retirement plan, RSP contribution limit, you always can call Tyler Atkinson to get best investment advice, RSP advice. So Tyler, thank you so much. Thank you for coming in our studio. We are really grateful, and we really enjoyed your company. You provide us a wonderful information about the retirement plan, all those things associated with RSP. We really thank you. And on the behalf of Nandan TV and behalf of Middleman, I really appreciate and thank you so much. Thank you.